Hello and welcome to Martyn Lucas Investor. My name is Sensei and you're watching the live FOMC Fed minutes release. That is coming out in just under 25 minutes. So let's get prepared for it. All our newsletter members have got the full cheat sheet today. If you do want to get it, it's the first link in the description. Do go and grab it. You get the daily newsletter, you get cheat sheets, you get every FOMC report, you get the portfolio challenge, you get the private channels, you get the one-on-one DMs, you get all of those perks. First link in the description. Go and grab it. But for now, can everyone firstly hit that like button? I see everyone in the chat saying hit the like button. Yes, guys, hit the like button. We are here to deliver the full report. Thank you, everyone, for tuning in. It's a weird time. We don't normally go live at this time. The bell hasn't gone yet. Martyn might be live with the closing bell. He's not feeling too well today, so we all wish him the best. We will see what happens there. But we will be covering this major event today. The event is the Fed minutes. So let's get straight into it. Let's put the timer on the screen. Let's get the newsletter up. Let me tell you what to expect. Here we go. So FOMC minutes report. There is a timer on the screen if you want to have a look. Let me just change that a little bit. There we go. So FOMC minutes cheat sheet. I'm going to tell you what the FOMC minutes are. Some people don't understand it. Some people think they're not important. I actually find them, especially in the times now where we're getting rate pauses, the minutes tell us more than the actual FOMC report. So if you like to follow the FOMC report, you definitely want to be following this. The minutes are releasing. The Fed held rates steady at 3.5 to 3.75 in the January after 3 straight cuts. We expect them to hold them steady further. I'll tell you all my expectations in a second, but let's lay out the scene. Today's minutes reveal the debate behind the decision. We are now going to go backstage into the minds of the Fed participants, the Fed governors, and see what they were thinking when they made this decision, because what that tells us is where they're going to go in the future. It gives us more detail than the rehearsed sort of report Jerome Powell reads out. This time there wasn't many questions asked to Jerome Powell, so essentially this report helps build a good picture of this year. So let's get into that. If I can ask everyone to hit that like button, because we are getting closer and closer to this minutes release. I do love covering these minutes events. We do get a lot of information. So we see the debate behind the decision, how close we were to another cut. How many more cuts are we getting? Were they going to cut? What? Because remember, all we get during the FOMC is how many people voted for a cut, how many people voted against the cut. the minutes will tell us how close they were to voting for a cut, or how stern they were with their decision, because it's not just a yes or no. Of course it is when we get rate cuts or pauses, but if we want to look into the future, we want to see why they made that decision and how strong they were with their holds and pauses and cuts and hikes, the individual Fed members. And whether mid 2026 cuts are still on the table. Remember, we started off this year, we ended off 2025 with everyone pricing in March cuts. It was a sure thing. Now, when we look at specific reports and we look at what the market's pricing, we'll get onto that, it's not looking that way. So are the minutes going to change that? And remember, we want rate cuts in the sense that we want the liquidity to be injected into the market, essentially. And that's what rate cuts do. But right now, there doesn't seem to be that need for rate cuts, at least until we get this minutes. We want to see how worried they are about tariff reigniting inflation. That's a major concern. A lot of analysts are pointing to the middle of this year for another hit of tariffs into inflation. Of course, if inflation's high, there's no need to cut. If inflation's high and unemployment's pretty strong, there's no need to cut rates. If inflation's high, they want to keep rates steady, or even there's some members that suggest we need to hike rates this year, and that will be terrible for the markets, especially when we're looking at AI cracks, when we're looking at carry trade unwinds. So all of these bits of information, and today's bit of information with the Fed minutes, is going to play a key part into all of that. At the same time, we've got Bitcoin in extreme fear, the S&P 500 under pressure, AI cracking. So every subtle word change in this document can move billions of dollars. So here's everything you need to know. Of course, I'm not going to go through this whole report because it is reserved for our premium members. They get this, they get to follow along, they get to see the full report, and we won't be going through certain charts, certain areas, but I will definitely give you lots of information. Today we are going to run 5 people to get 50% off the newsletter. So it's the first link in the description. I'm actually going to throw it into live chat now as well. Today only, 50% off. So go and check that out if you want to be part of the newsletter and get all those perks. And when I say all those perks, it is literally every single perk there. Daily newsletters, XRP weekly, crypto reports, event sheets like this with the actual FOMC, the CPI, the Japan carry trade. We get deep dive research, you get one-on-one DM access, you get to join the private community, you get to get the chart training course, you get to be part of the £5,000 portfolio challenge we've just kicked off. Remember, I'm building my base now, going a little bit defensive. You can see exactly every single position I'm holding and all the research behind it. Never financial advice, but I tell you all of that. You get all of that at 50% off today, so go and check it out. Oh, Marsha says, the newsletter's great. Thank you, guys. Oh, Marsha, thank you so much. Really appreciate it. Okay, so what is the minutes? Some of you might be asking, why the hell am I tuning into the minutes? Well, they matter a lot. So the FOMC meets 8 times a year. That's the Federal Open Market Committee. They meet 8 times a year. That's why it's not every single month. There's 4 months in the year which we don't get it. So they meet every 8 years and they decide what the interest rates are. We all know that. But after each of those meetings, they release a short statement with their decision. So every time we read the statement, we see what the words are. Then 3 weeks later, and today is 3 weeks later, they release the minutes, a detailed 15 to 20 page account of the full discussion that took place behind closed doors. This is where the juices, this is where the important details are sort of hidden away. The statement tells you what they decided, and that's what we get on the FOMC day. The minutes we get today tell you why and how divided the committee actually was and what concerns are building internally. Again, this is us essentially going into that Fed meeting and seeing exactly what they were talking about and discussing. It's very useful. We're getting a little bit of a correction in the market right now. We've got the charts on the screen. Look at this. Bitcoin heading down, the Nasdaq heading down. We've also got XRP's price over here if we want to have a look. But we'll keep Bitcoin and Nasdaq because that will lead the market anyway. And here we go. We are heading down into the minutes now. If you have just tuned in, please hit that like button. We are 15 minutes away from the minutes. So the statement tells you what they decided. The minutes tell you how divided the committee actually was and what concerns are building internally. The distinction matters. A 10-2 hold could mean the committee was firmly aligned on pausing, or it could mean 5 members were on the verge to cut and barely held back. And that's what we're looking for in the minutes. How strong were they with their decisions? And because 10-2 can mean a lot of different things, and that's what we got. We got 10 people voting for a hold, 2 people voting for a cut. We want to know, were those 2 people that are voting for a cut on the verge? Were those 5 of those 10 people voting for a pause? Were they on the verge to cut? Was there a few people on the verge to hike? That's what we get in today's minutes report. So again, those are 2 completely different signals for where rates go next, and you can only find that out from the minutes, and that's why we're covering it. People say it's boring. I like the boring things because the boring things allow me to decide how I position my portfolio and allows me to trade it. Uncle Marge says, thank you for the cheat sheet. No worries, guys. Yeah, again, all the people that have the premium newsletter are already probably a bit ahead on the newsletter. They've got it all in front of them, at least when it's happening as well. The minutes are also surface the internal debates and the official statement that the official statement smooths over. Remember that statement that Jerome Powell comes out and reads? It's very calculated. It's very political, or not political. It's very calculated, essentially. And then these minutes are very much pretty open, and we can take away a lot more. Different members hold different views on inflation, employment, and tariffs, and the minutes reveal who's pushing for that and how aggressively. For traders and investors, that level of detail is where the real edge lives. So let me just give you a little bit of the backdrop. Where are we right now? I'm just going to make this slightly smaller just for now, and then we'll make it bigger when the announcement occurs. If you have just tuned in, please hit that like button. We are covering the federal, the FOMC minutes. Where are we right now? Well, the rates are between 3.5 and 3.75. We've just paused. We're expecting more pauses. The January vote was a 10-2. 2 people wanted to cut. The dissenters were Martyn and Waller. CPI was the lowest in years, but the tariff goods were still hot, 2.4%. Core PCs, 2.8% on Friday. Friday is going to be a massive day as well, the second biggest day. Actually, maybe even the biggest day, but this week, the minutes are important in 50 minutes, and PCE. PCE is the Fed's preferred metric to view inflation. The November numbers were 2.8%, which is obviously still very, very sticky. We'll see what PCE is on Friday. We'll be covering it live on the show. So if you haven't subscribed, please do. Unemployment is at 4.3%. It's pretty stable, but we know that hiring has slowed dramatically. Again, worst case scenario is you get unemployment going up and inflation staying sticky. That's when you get a recession. GDP growth, 3.7 to 4.4% annualized. The economy is very strong. The US tariff rate is the highest since 1932, and that's the worry that we might see in the minutes, is how much is that creeping in to the decisions that the Fed are making, and how much is that going to creep into actual inflation? Is it transitory like many think, or is it actually going to have a bigger effect? Is it a one-time pass, or is that one-time pass not come through yet? These are the questions we might get answered. Well, we won't get answered, but we'll get their viewpoints on it. And again, that's all that really matters, because once we get their views on it, that's what the market prices in. We've got Bitcoin at extreme fear. We had the capitulation down to 60,000. We bought at 60,000. We bought XRP at the 200-week moving average around $1.13, 12, 14. That's where the buys were. And then we sold on the way up and held some for our spot position. And then the next FOMC is in March. And that FOMC will actually have the SEP and the dot plot. So big FOMC in March. And again, right now it's not looking likely at all that they will cut. The beginning of this year, the end of 2025, it looked like we'll get a cut in March, but now it's not looking very likely. The first cut is now priced in June of 2026. So let me tell you a few of the things I'm looking for in these minutes. We want to look for dovish signals. Again, I'm looking to get in the market rather than find a reason to short the market. So I'm focused on the dovish things that can come up in these minutes. And again, the minutes that will be released over here, I will have it running in the background. We'll get the information come through. We'll go straight to Bloomberg as well, which will be running over here. And we will, 5 minutes after the report comes out, I'll give you my full analysis as well. But again, it looks something, if I bring up if I bring up the last one we had, which would have been December of 2025, we get something like this, the minutes. And it's a document like this. We will run this through our systems and get all the information for you. We've got everything set up in the background for that. But essentially, this is all the important stuff is hidden away in the minutes. And this is where the minutes are. Let me just move this over slightly. There we go. But this is, again, this is December's one. We're looking for January. And again, we'll be comparing it from December to January to see what has changed. So the dovish things I'm looking for is specific statements within it. Several participants favored a reduction. That would mean more members wanted to cut than the 10-2 vote suggested. Rally rates could be coming sooner. These are examples of statements that we want to see. Further progress towards 2%. That means the Fed believes inflation is heading in the right direction. That's bullish. Labor market showing signs of softening. That's very bullish. Why? Or you might say if unemployment's going up, that's not great for the economy. Well, it's not great for the economy, but the economy is not the stock market. Like we saw in the UK a couple of days ago, or maybe even yesterday, unemployment was very high. It was higher than the market expected. And today, inflation was at where the market expected, quite low. And the FTSE is going crazy. It's up, up, up. Why? Well, because if unemployment's heading up and inflation's under control, it means they can cut rates, and it means money and liquidity can get injected into the system. So if we see them talking badly about the labor market, again, this is something I'm going to be analyzing when it comes out, that would mean that's good for rate cuts. If we hear tariff effects are likely transitory, that means just a one-time effect. Again, that's bullish because people will say it. The Fed doesn't think the tariffs are going to affect the market for much longer. The tariffs were going to be a one-time hit, and come next year, they won't be part of inflation. And again, that'll be pretty bullish stance. Current stance may be more restrictive than necessary. Again, if you want all of this, you would have to go and be a newsletter subscriber. You can get all of this every time there's a big event like this. We'll give you the full cheat sheet, and you can read it. You can put it into your systems. You can scan it yourself. You can have it in front of you. All of this sort of stuff. And again, even if you're not trading it, it's great to start learning about all of these signals, just so you get used to it. As it does, I don't just normally short-term trade. I normally have long-term swing trades, and it still helps me position my portfolio by starting to understand this more and more and more. And these cheat sheets will help you understand it more and more. So I'll give you the link for the newsletter. Again, there is a free plan, there is a monthly plan, but today we are running 5 people will get 50% off. The link is in the live chat. If you have just tuned in, hit the like button. 8 minutes away from the FOMC minutes. Also, if we hear something like current stance may be more restrictive than necessary. And again, I haven't plucked these out of thin air. These are things we've seen before that have caused market rallies. So if they say that current stance is more restrictive, essentially they're saying the interest rates are too high, too restrictive. They're having an effect on the employment numbers. There's no need for them to be that high with inflation being steady. They're too restrictive. They need to come lower. Again, that's a very bullish signal. Many participants doing anything dovish, near consensus forming around is a strong rally signal. Again, we've got the opposite as well. So think of the opposite. What would the bad be? Things about inflation being too high. Even comments like additional evidence needed before adjusting. That the market won't take too well, because it sets a high bar for the next cut. Upside risk to inflation, again, concern that prices could reaccelerate, that's bearish. Inflation expectations could become unanchored, that's a serious concern. That means tariffs embedding into psychology of the market, that's a strong sell-off. So again, you'll start to understand, this will start to paint a picture of what we're looking for, what we're not looking for, and I'll be doing this in the background as soon as that FOMC minutes comes out. So again, anything that suggests unemployment is going up, that's bullish for the market. Anything that suggests inflation is going down, that's bullish for the market. Anything suggesting unemployment is employment is very strong, that's not very bullish for the market. And anything suggesting that inflation is going to be sticky, tariffs are going to have a big effect, and inflation is going to stay high, that's not very bullish either. That will be pretty bearish. So again, there could be a neutral outcome. just look at the data. We're well positioned to respond. The risks are roughly balanced. That's all neutral, and that won't have an effect on the market. Again, this is the premium members newsletter. This is a cheat sheet. So again, I'm not going into every little bit of detail. That is reserved for the premium members. Here's a few wild cards that could blindside the market. The dissenters debate. 2 governors, Miran and Waller, voted to cut. But how many of the 10 who voted to hold were close to joining them? And that's the question we want answered. So let me repeat that. There was 2 people that voted to cut. It was Miran and Fed Waller. Remember, Waller's that really pro-crypto member. And they're the only 2 that voted to cut. But what we want to know, and what the minutes could tell us, again, the minutes is this behind the scenes into the day of their meeting and exactly everything that was discussed. What these minutes could tell us is those 10 people that voted for a pause, were they close to voting for a cut? Because if they were close to voting for a cut, that would suggest we might get rate cuts sooner than expected and a market rally. Again, that's all that's distinguishing the minutes. Or were they actually close to, or were they very firm with their decision? Are they saying they're not going to cut anytime soon? Again, that could be pretty bearish for the market. Or even worse, whether some of those 10 people that voted for a hold, were they close to voting for a hike? Again, that would be a major sell-off in the market. That could be the start of the recession. That could be the start of the big pullback we might be expecting this year. Remember, I'll tell you my full outlook for crypto and the markets in a minute. Again, another big thing we're keeping our eye out for in these minutes is the tariff language. What are they saying about tariffs? Are they saying it's a one-time hit to inflation? Because again, whether you like it or not, whether you like Trump or you don't like Trump, tariffs affect consumers. Tariffs have had an impact on inflation. Tariffs have made things more expensive, not only for companies, but for consumers. That's a fact. What we want to figure out now is it a one-time hit to consumers, or are we going to continue to see rising prices based off tariffs? Remember, inflation never goes down. Everything always gets more expensive. But what we want to distinguish with tariffs is tariffs now always going to be worse and worse? Or was it a one-time hit for the consumer, and then we move on, and next year it's going to be 0.6 basis points lower, and inflation is going to be closer to 2% because tariffs was a one-time hit? That's the big debate. Is tariffs transitory? Most people say yes. But if the Fed and Fed participants start saying, actually, it might not be, and inflation is way too sticky, and we don't think it's going to be transitory, we don't think it's going to be a one-time hit, that's when people get concerned. That's when we can get a sentiment change in the market, and that's when we can get rates staying still for a very long time. I apologize, I've just lost a light. Let me see what's going on. What's going on there? There we go. Okay, so 3 minutes away from the minutes. Can everyone smash the like button? These are the top things we're looking at today. Fed, so again, it's the minutes. What are the minutes? Let me just refresh your memory. The minutes are behind the scenes. So what are the minutes? The FOMC meets 8 times a year. We know about that. That's the FOMC report. But 3 weeks later, they release the minutes, a detailed 15 to 20 page account of the full discussion. That's what we're getting in 3 minutes time. And it's a document this long. I'll be analyzing behind the scenes with the systems we have in place and the people behind the scenes. While we listen to Bloomberg in 3 minutes, the market will be reacting, and then I'll give you my thoughts on it. So what does the minutes tell you? It tells you how divided the committee actually was and what their concerns are building internally. Again, this is sort of a behind the scenes look into what actually happened for them to decide on the pause. We get a lot of information. It's more important than the actual FOMC meeting, because when it's the FOMC meeting, Jerome Powell just reads from a script. It's very calculated the way he says it, and we just have to wait 3 weeks until we get the actual minutes, which we're getting in 2 minutes time. What we want to see is bullish statements. Again, that's for me in the market to be sort of bullish on the market. I want to see statements that refer to unemployment going up, because that'll mean rate cuts. I want to see statements to support inflation coming down. I don't want to see statements about inflation staying sticky or rising up. I don't want to see statements about tariffs having a major effect. I want to see what the Fed committee was, how strong they were with their holds or their hikes. How strong their opinion was on holding. Were they very close to cutting, or were they very torn between holding and raising. That will be very interesting to see, because a 10-2 vote is not just a 10-2 vote. There is a reason behind every decision. They might have been on the fence for cutting. We want to see the political pressure. We want to see anything about Kevin Walsh in there. We want to see anything about quantitative easing as well, because quantitative tightening ended in December. We want to see if there's much more easing coming as well. Again, this is the full playbook. We've got it in the newsletter. I always release these minutes and the cheat sheets for any major event in the newsletter. I release my full trades, my £5,000 portfolio challenge in the newsletter. I'm going to give 5 people the chance to get it for 50% off. That is in the live chat. Okay, we're 1 minute away. I want to wish everyone good luck. Remember, I don't like to trade these events unless there's a big swing going on, and then I'll take advantage. I like to analyze the data. I like to paint the picture for my longer term investments. And I will be doing that. I'll give you my full analysis about 5 minutes after the release is done. I'm going to get Bloomberg ready now. So again, I'll recommend anyone who's watching live to make sure you've hit the live button. Let me remove that from a second right now. If you're watching me live right now, press this button here. It says live, and then go over to the cogs. If I show you over here, and press playback speed 2 times, and then you're right up to date with me. So here we go. We're oh God, no, didn't mean to do that. We're seconds away now from the decision. Oh, what have I done? Okay, 18 seconds away now from the decision. So let's get ready. Good luck to everyone. We're live all the time for all of these events. Let's go over to Bloomberg.
Happened on January 28th. You know, that's the meeting when the Fed kept.
Here we go. Breaking news.
Rates steady, and you had 2 Fed governors, Chris Waller and Stephen Myron, voting against the decision in favor of lowering rates by 1/4 point. So we are waiting for them to
Let's go. What's going on?
Yeah, Chair Powell also back then talked up a, quote, clear improvement in the U.S. outlook and said the job market shows
I'll be analyzing this. I'll get straight back to you.
Signaling a cautious optimism.
All right, let's head to D.C. and outside the Federal Reserve is our own Michael McKee. Mike.
Okay, here's the headline in a very newsy set of minutes. Several participants indicated that they would have supported a 2-sided description of the committee's future interest rate decisions, reflecting the possibility that upward adjustments could be appropriate. The focus of the January meeting on inflation largely, rather than jobs, and concern that bringing it down had stalled. Officials anticipated inflation would move down this year, but the pace and timing remained uncertain. The continuing rise in prices driven by tariffs, the minutes say. The effects would likely start to diminish this year, and ongoing moderation in housing prices would also help. High productivity growth from technology might also put downward pressure on inflation. And a few participants mentioned that companies were telling them they are automating more operations to try to offset some price increase needs. Most participants, however, cautioned that progress toward the 2% objective might be slower and more uneven than generally expected, and judged that the risk of inflation running persistently above the committee's objective was meaningful. Some cited reports from business contacts expecting to raise prices this year. The labor market, the committee's big concern last year, was less of a concern this year. The vast majority of participants judged, the minutes say, that labor market conditions had been showing some signs of stabilization and that downside risks to the labor market had diminished. Still, most agreed downside risks to the labor market remained in place, particularly as the labor supply diminished. Overall, the economy appeared to be expanding at a solid pace with resilient consumer spending and robust business investment, particularly in technology. Several, though, suggested a lot of that was due to spending by higher income consumers. Lower income spending was soft. There was a long discussion of markets, with several commenting on high asset valuations and historically low credit spreads. Some saw vulnerabilities in AI, including elevated equity valuations and gains concentrated in a small number of companies. Several highlighted concern about the private credit sector, and others commented on risks associated with hedge funds and rising leverage. Finally, the January meeting is when the Open Market Committee elects its officers for the year. Jay Powell, again, named chair of the committee, but the minutes.
Got to say, Mike, it sounds like they all had their Wheaties that morning.
It was a busy meeting, right?
It sounds like they covered a lot of stuff. Hang on for a second, because I want to see what you think is of most importance to the Bloomberg audience. Having said that, just taking a look at equity markets firming up a little bit.
Okay, I've got the full analysis for you guys. Let's get straight into it. If you have just tuned in, hit the like button. We've just got the Fed minutes. Let's go into it. So we've just got the minutes come out and we've got the key takeaways for you. So Mirren and Waller were the two dissenters. We knew that. They both wanted a 25% cut. We didn't know that. Now we know. They wanted a 25% cut. They didn't want a 50 basis point cut. Sorry, a 25 basis point cut, not a 50 basis point cut. The hold was widely expected, but the internal debate reveals important shifts. So the key line that was removed from the statement, downside risk to employment rose in recent months. That was removed from the statement. What does that mean? Again, give me 5 minutes. Let me tell you all the analysis, and then I will give you the full information. So the key line that was removed was downside risk to employment rose in recent months. That means in the December report, the December minutes, remember the minutes are more important than the FOMC, they used that line, downside risk to employment rose in recent months, essentially meaning unemployment's going up, they were going to cut rates. They've removed that statement from today's minutes that just got released, meaning that they're actually probably no need for them to cut rates. Let's continue. Let's go through all the statements. Give me 5 minutes to tell you all of this information. So what happened next? So in December, this language was justified cutting. In January, almost all members no longer judged that this was the case. That removal signals that urgency to cut has faded. We're not going to get 5 rate cuts. We're not going to get 4 rate cuts. We're not going to get 3 rate cuts. The market priced in about 4 or 5 earlier this year. Now, we would be lucky to get 2 rate cuts this year. Economic data was upgraded from moderate pace to solid pace. What does that mean? Let me put the chart back on the screen as well. Let me remove XRP there. The markets aren't reacting too harshly right now, but so far, not brilliant. Let's continue. Economic activity was upgraded from moderate pace to solid pace. This is a meaningful language change in Fed speak. It means the committee sees a stronger economy than last time. Okay, again, the economy is not the stock market. If there's a very strong economic activity, it can mean a good thing, it can mean a bad thing. But in this sense, it doesn't mean they're going to cut rates. If the economy is very strong, there's no need to cut rates. Give me 1 minute. Let me tell you this. We give you all of this analysis. I'm going to be publishing this analysis plus further details from specific research about the minutes to all the newsletter members. There is a free newsletter, there's a paid newsletter, there's a monthly newsletter. 5 people today, only 5 people will get it at 50% off. I give you the full cheat sheet at every major event. I give you the top headlines 2 hours before the opening bell every day. If you're investing in the markets, you want this newsletter. You get the 5 top stories, you get the money move of the day, you get the charts every single day, you get deep dives on macro crypto every day, you get the XRP weekly newsletter every single week, the crypto newsletter, you get the one-on-one DM access, you can message me anytime I respond, you get the private community. I've just started my very own £5,000 portfolio challenge. I'm starting with 5,000. I'm building up the bases. I've gone defensive to begin with. I'll be telling you all my positions if you're part of that. So go check it out. I'm going to give you the link. Only 5 people get it today for 50% off. Again, there is a free plan as well, so go check it out. Let's go straight back to analysis. Again, if you've just tuned in, we've just got the Fed minutes. I'm giving you the analysis. Give me 5 minutes of your time so I can give you all of the analysis. Economic activity was upgraded from moderate pace to solid pace. This is a meaningful language change in Fed speak. It means the committee sees a stronger economy than last time. Let's continue. I'm going to tell you all the dovish things and the hawkish things as well. Several participants raised the possibility that rate hikes could be appropriate. Oh God, here we go. This is not brilliant actually. Several participants raised the possibility that rate hikes, again, this was the last thing you wanted to hear, that rate hikes could be appropriate if inflation stays above the target. Inflation is above its target. It's been above its target for too long. And now the issue is there's participants that are signaling maybe instead of pausing, instead of actually even cutting, we need to start raising rates in 2026. And this is why my thesis for this year is either a recession, a 10% pullback, a 20% pullback, a carry trade unwind, no rate cuts, an AI crack. Something's going to break. In my opinion, again, I'm positioned for the upside, the downside, and I'm positioning my portfolio more for the downside. I'm getting ready to buy more crypto. We bought some at the very lows. I'm going to get ready to buy some more. I'm building the defensive positions in my portfolio. If you want to see exactly what I'm building in my portfolio, you can go check out the newsletter. We're starting the £5,000 challenge. So I'm building the basis of defense. Again, I've gone to healthcare industry as well because I think healthcare is quite defensive. Plus, there's growth within AI. So there's a few places like that, especially in utilities as well, with copper as well. These are all part of my portfolio, and I give you the full the portfolio ledger with all the updates plus the full research. So this is backing up what I'm doing with my portfolio right now. Martyn said, I use the newsletter every day as part of my strategy. Thank you, Martyn. Yes, we use it's essentially the show notes. We use it as the show notes. It's our research. It's how we use position ourselves. A big part of that is another tool in our toolbox is the newsletter. There's 5 people get it 50% off today. I'll give you the link in the live chat. So let me read that again because that's probably the biggest point in this whole minutes report. I'm going to increase this timer because we're going to spend another 5 minutes analyzing this before we get into the charts and all my other thoughts. Let me just put that there. Let me change that countdown. If you have tuned in, can everyone please hit the like button? How many people do we have with us right now? 2,000 people. Oh my God, what's happening today? 2,000 people. Thank you everyone for tuning in. If you haven't subscribed yet, please do subscribe. Tune in on Friday with PCE inflation. It's the Fed's preferred metric. That will be, if that's up, that will be all I need to know to stay in my defensive positions. So several participants raised the probability that rate hikes could be appropriate if inflation stays above target. This is entirely new. Rate hikes were not discussed in December at all. Oh God, here we go, rate hikes. Oh no. Even as a minority view, the fact that it made it into minutes is a hawkish flag. That is definitely a hawkish flag. Never before have we really been mentioning rate hikes. There was only once we heard one participant suggesting that there might be a rate hike this year. Now there's a few people mentioning rate hikes and it's in the minutes. Labor markets here's the next point. Labor markets fears eased significantly. The vast majority said downside risk to employment had diminished. A big shift from December where most still saw those risks as tilted to the downside. Okay, so looks like the labor market is not a concern for the Fed anymore. Again, that's not good. You might think that's great. Unemployment should stay low. Well, yes, if we're morally speaking, yeah, we don't want people to lose their jobs. But if we're talking about liquidity and rate cuts, if there was labor fears, which there once was, and that's why the market was rallying, if there was labor market fears, we would get rate cuts. Now, in the minutes that just got released and we've just analyzed, it doesn't seem like there's fears about the labor market anymore. Uncle Margin, does Martyn teach you the wash rule for using tax lots? I don't use tax lots. We don't have them in the UK. It doesn't work with our tax strategy here in the UK. Anyway, let me continue. I'll come to your questions in a second. Smash the like button, says Lance. Thank you, Lance. No rate cut now. Yeah, the rate cuts are not looking very likely. We might only get one rate cut. We might actually get hikes this year. Let's continue with the analysis. I'll give you my full thoughts. Give me 5 minutes to go through this analysis, then I'll answer your questions and give you my thoughts. So here are the dovish statements. Here are the hawkish statements. Let's start with the dovish and see if there's anything good. Near-term inflation compensation continued to decline, driven by lower CPI, lower energy prices, and lower than anticipated pass-through of tariffs to consumers. The tariff inflation story is weakening. Yeah. So that's bullish. That's what we expected. That's what they've sort of said before. Nothing new there. They're essentially saying inflation is coming down, but I'm sure when we get onto the hawkish section, they're probably saying it's actually still too high. So yeah, we are seeing inflation come down. We've covered CPI. We want to see PCE on Friday as well. Inflation is coming down, which is great. But is it to the pace they want? Let's continue. Several participants expected higher productivity growth from AI and regulatory changes to put downward pressure on inflation. Okay, so they're saying because of AI growth and regulatory changes, inflation should come down. That is, I think that's pretty new, so that's good. And remember, when we say several, that's probably like 3 or 4, 5 people. Several participants said housing services disinflation will continue pushing overall inflation lower. That's another reason inflation could come down. Money market conditions stabilize. These are all the bullish things, the dovish things that were said in the minutes. We've analyzed that. We're giving you the full report. Money market conditions stabilized. Repo pressures moderated. Year-end stress was better than expected, and reserve management purchases are working as intended. Again, these are supposed to, we wanted to show you all the dovish statements made in the report, but these aren't very dovish statements. They are dovish in the sense of being dovish, but they're not extremely dovish. Let's continue. Is there anything else that's good? Market-based near-term inflation expectations declined further from their spring 2025 peaks. Market-based near-term inflation expectations. Okay, yeah, we know inflation's coming down. The issue is it's really quite sticky as well. We need more information on inflation. Two members, Mirren and Waller, still voted to cut, showing dovish faction still remains on the committee. Yes, they have. That is obviously good. There's two people that wanted to cut, but maybe they only wanted to cut once. Let's go on to the hawkish, because I'm worried that the hawkish side of things is a bit more strong. Let's get into it. If you are watching live, please hit the like button. Thank you for tuning in. We're covering the minutes. We just saw Bloomberg report it, but again, Bloomberg reports aren't that good. We've just done the full analysis and I'm bringing it to you. I'll give you the analysis on the charts, my thoughts on crypto, my thoughts on the stock market. I'll answer all your questions in a second. Please do hit the like button though. Subscribe if you haven't done so already. Consider getting the newsletter, because if you did have the newsletter, you would have the full playbook for the minutes. You would have the full playbook for the FOMC, the Japan carry trade, the Japanese rate hikes, the CPI, the PCE. Every time there's all of these reports, I tell you everything you need to know about 2 hours, 3 hours before the information actually comes out. And you can get it for free. You can also get it for 5 people. It might have sold out. 5 people, 50% off as well. You can also get it monthly. Go and check it out. This is the one we put out before today's minutes. It's still very relevant. You get to see what the minutes are, why they're important, the backdrop, all the information there, the cheat sheet, what to look out for, what means what, the wild cards, what's there as well. The 2026 to know your voters, see who they are. The scenario playbook, the timeline, my charts, exactly what I'm trading, what I'm looking at, the S&P 500, silver, Bitcoin, all of that. Again, you get a lot more. You see the rate paths, the dot plot. Again, I'll try and make it very easy. So it's for beginners to intermediate. Advanced people, again, it's good for you as well, but it's focused on intermediate people who are interested in trading, who want to increase their knowledge. So go and check out the newsletter. It has all that information. Again, this is in conjunction with all the other perks you get every single day. You get 2 hours before the opening bell, the 5 top stories you need to know. Remember, why do I do that? Let me tell you why. About 9 years ago, I started charting. I spent thousands of dollars trying to learn every single method of charting. 90% of it was not necessary, but I still learned something. And then I was charting and I was making profit. However, I was missing one key thing. I wasn't understanding the markets enough. I wasn't understanding the news. So then I started reading the news. I started subscribing to the Financial Times, Reuters, Bloomberg, every single thing you can think of, I was subscribed to, and I was spending hundreds, probably a month, on all the news. And then when I put that in conjunction with the charts, I became a very profitable trader. But the issue of charts was it took me very long to learn. I made a lot of mistakes. The issue of news was it was very expensive. Plus, it was political. Plus, there was lots of ads. Plus, there was lots of people getting sponsored. So that therefore, their news wasn't very trustworthy. So I decided to make our own newsletter. What I do every single day, the night before and the morning of the newsletter, I spend about 5 to 6 hours researching every single news story, the most important ones. You only need 5. So I put the 5 news stories into a newsletter every single day. I then tell you the number that matters, the one big thing. I give you a deep dive every day. I give you the chart of the day every single day, 2 hours before the opening bell every trading day. And then I'm also going to release the chart training course. Again, it's going to be a 2-hour video. It's not like all these other people that create all sorts of courses for charts. Again, it's just going to be part of the newsletter subscription. So we're not charging extra for it. It's going to be a 2-hour video and you're going to learn everything I do, everything I know. That's all part of the newsletter. Plus, you get event cheat sheets. Plus, you get emerging tech. Plus, you get my £5,000 portfolio challenge and how my full playbook on that. Again, remember, we bought XRP at 30 cents and went to $3. We bought Rocket Labs at $10, Robinhood at $10. We bought Tesla at $10. All of these things were great buys. Coincidentally, a lot of them were at $10, but those are the ones I can remember. You get that playbook, you get the £5,000 portfolio challenge, you get everything on this list, the weekly crypto report. Go and check it out. 5 people get it for 50% off. So go and check it out today only. There's also a monthly plan and a free plan. Let's go back to the analysis. So that was the cheat sheet. Let me go back to the analysis we've just done behind the scenes. Okay, this is where it can potentially get a bit interesting, and this might back up what we've been saying. Let's come on to the analysis. So I can get rid of that timer now. And we're doing the analysis now. So if you've just tuned in, we just got the minutes released. We're analyzing it. So far, it looks pretty hawkish. We looked at all the dovish points. It wasn't very dovish, really. So let me replace that. It wasn't very dovish. The dovish points weren't too dovish. Now we're coming on to hawkish points. And then I'm going to give you my full reaction because I feel like these minutes weren't very good. Here are the hawkish things that have just come out. Several participants said rate hikes could be appropriate if inflation stays elevated. This is not good. Let me just, pretty sure in here, let me several. Yeah, a shift from a few to several between meetings is often more market moving than the actual rate decision. So several means growing momentum. That was in the playbook today. I just want to check that definition for the Fed minute. So there's a growing momentum. There's more than a few people now that are saying within the Fed, and these are the people that vote whether there's hikes, pauses, or cuts, now suggesting that if inflation stays where it is, and they haven't mentioned this before, that they're going to raise rates. This language is brand new. Hikes were not mentioned this December. No, that we haven't heard the term hikes from the Fed in the longest time. And today, 20 minutes ago, in their report that they put out, we saw the word hikes. And not just a few participants, several participants are now saying inflation is a concern. If it's going to continue on this way, we're going to get hikes. And if we don't get hikes, the least we're going to get is a long pause and no more cuts for a while. Not good. Let's continue. Most participants cautioned that progress towards 2% might be slower and more uneven than generally expected. Oh, God. Yeah. I don't know why the market isn't crashing right now. Again, the market moves weirdly. It can go up on bad news. It can go down on good news. But my thesis right now, which I've been presenting for the last 7 months with crypto, again, like I said, we're in a bear market on crypto. And over the last few weeks to a month, I've been saying the stock market's now a concern. When you pair it with what we just got in the minutes, I wouldn't say I'm super bullish on the markets right now. So we've got people saying it's hawkish, and now we've got most participants. That's saying, I don't know, 8 people within the committee, 8 out of 12, at least 7, cautioned that progress to 2% might be slower and more uneven than generally expected, and called the risk of persistent above target inflation meaningful. Inflation is a major issue, and they're talking about inflation here. Inflation could stay sticky, and unemployment could also go up, and that will be recession. If we've got inflation staying sticky, unemployment staying pretty steady, then we might get rate hikes, and we might just get a smaller correction in the market. But again, if we get rate hikes, and if this sentiment starts moving into the media and people start getting a whiff of rate hikes, and they actually trust what the Fed are saying, then we've got a bit more of a correction on the way. In my opinion, again, I'm not a financial advisor. I'm not an analyst. I'm giving you my opinion. I'm telling you what I think and what my analysis is saying and how I'm positioning my portfolio. Overdramatic Bitcoin was 120K when rates were higher. Yes, someone's just said that. Great question. Let's go over here to our live chat. Someone's just said overdramatic Bitcoin was 120K when rates were higher. That's correct. Why was it higher? Well, because we're on an easing cycle. We thought we are just going to get rate cut. Next year, we're going to go rate cuts. Now, it's not, you don't look at what we were at the time. You look at where are we going in the future. And now it looks like in the future, we're not getting rate cuts. We might be getting a pause. We might only be getting one rate cut. We might even be getting a rate hike. So that you don't look at what you were doing at the time. You look into the future. The market looks 6, 12 months into the future. It doesn't look at what we're doing yesterday. It looks at what we're doing in the future. Most participants caution that progress towards 2% might be slower or more uneven than it generally expected. Again, uncertainty in the market is not what the market likes. We had good certainty. When crypto was at 120K or Bitcoin was at 120K and XRP was going up, we had pretty good certainty for the future. There wasn't big geopolitical issues. Yes, there were a few, but nothing like what we're seeing in the Middle East today. There wasn't any chance of rate hikes. No one was even mentioning rate hikes. We were looking at rate cuts, and now we're not. Some participants said no easing may be warranted until there is a clear indication that progress of disinflation was firmly back on track, a higher bar for the next cut. So people are now saying we don't need to cut anymore. This is why we look at the minutes. This wasn't made clear during the actual FOMC. This is why I like to look at the minutes, because this is what we're seeing in the minutes. Let's continue. Some participants said no easing may be warranted until there's a clear indication for the progress of disinflation was firmly back. So they want to essentially what it's telling us now is keep an eye on inflation. We are going to cover every single inflation report on this channel. PCE, CPI, PPI, UK inflation. Why? Well, because that's all the Fed are focused on now. They are worried about inflation. They're making it clear. They're no longer worried about unemployment. They've said they're no longer worried about it. They are worried about inflation. They will not cut rates if inflation stays at these levels. They might raise rates if they stay at this level. They will definitely raise rates if it goes any higher. Let's continue. This is not what I was expecting, but it does back up what I have been saying. We're going to go onto the charts and your questions in a second. Some participants said no easing may be warranted until there is indication that progress of disinflation was firmly back on track, a higher bar for the next cut. We're not going to get rate cuts easily now. Every rate cut is going to require a lot for them to cut rates. Several participants warned that further easing could be misinterpreted as diminished policy commitment to the 2% inflation objective. Several participants warned that more rate cuts could be misinterpreted as implying diminished policymakers' commitment to the 2% inflation objective. Same language as December, this concern is not going away. The staff revised its inflation forecast slightly higher. Oh, God. The markets aren't going to like this. Whether it's today, tomorrow, a week from now, the markets won't like this. Essentially, what they're saying now is the people on the committee, the people at the Fed, have now internally raised their inflation targets. They are now expecting inflation to be a bit more sticky, a bit higher, which again would mean they're not going to cut rates. And again, that's something that's changed. This is something the market hasn't priced in yet. This is new information, came out just 26 minutes ago. The staff now projects unemployment falling below the natural rate by end of year 2026. That means the economy is running hot enough that cutting would add fuel. Again, another reason they wouldn't cut rates. I'm going to come to all your comments in a second. Core PCE was eliminated at 3% for December. Sorry, what am I saying? Core PCE was estimated at 3% for December. And PCE, again, is what we're getting on Friday, a big inflation report. That's going to be massive. Please tune in for that because that's going to be a very important report. So core PCE was estimated at 3% based on CPA, a bit based off CPI, up from 2.8% November reading. The trend is moving the wrong direction. Okay, look, the market's catching up. The market is catching up. The market is now down. The S&P the S&P 500 now moving down. Let's have a quick look at the markets. Let's go over here. Let me turn that off for a second. Let's have a quick look at the market. Let's go on to the 15-minute time frame. Yeah, here we go. Bitcoin is heading down now, down 2% on the day. Lows of the day on Bitcoin. That's what we're getting right now on Bitcoin. XRP is, yep, lows of the day. Definitely the lows of the day. Now down 3%. This is what I've been warning about, the S&P 500, not the lows of the day, but certainly eroding all the gains it had today. It's still holding up a little bit better than the crypto market. Gold, not liking it again. Gold and silver tend to like rate cuts, and if rate cuts don't come, it's not good for gold and silver. Let's go over to a few stocks as well. One of our XRP stocks up 22% today. Let's have a look. Apple is coming down. Rocket Lab is up 6% today, but selling off slightly now. Enphase coming down. Dollar Tree defensive, heading up. Heading up again. That's why I'm positioning myself defensive. Amazon up on the day, but heading down slightly now. Nvidia earnings is going to be massive next week. If you haven't subscribed yet, or if you're not a member of the newsletter, I'm going to give you my full thoughts on PCE. You're going to get all of this analysis for PCE on Friday. You're going to get my full analysis on Nvidia next week. You're going to get analysis on the Japan carry trade decision as well. You're going to get the next FOMC. All of these big data points, you get an additional newsletter with all the information you need to know, all the charts I'm looking at, all the trades I'm making, all the moves I'm making on the portfolio challenge, the daily newsletter as well. You get all of that. I'm giving it away 50% off. Go and check it out today only. It's in the live chat right now. Let me know once you've got it. Message me on Substack. Again, we're in the top 100 in Substack. You can message me there. And then I can welcome you in as well. Say hello in the group chat as well. Let me just check this. I'm going to give you my final thoughts in a second as well, so stay with me. Let me just make sure everything is working over here. Oh, there's only 2 spots left. 2 spots left for the 50% off. Only 2 left. If you want to get it now. We don't run these offers at all. So 50% off today only. Again, yes, we do run offers time to time, but when it comes to 50% off, that is not normal at all. Okay, let's go back to analysis. The market is now heading down. Let's have a look at a few more. Coca-Cola is down today. That again, that's defensive, and that's now heading up after the FOMC report came out. S&P 500 still selling off. Have a quick look at the market. Microsoft heading down. Google heading down. Tesla heading down. Yeah, this is not, the market's not, it's finally reacting. Let's go back to our analysis. So what changed from last time? Because again, that's what's important. What has the market not priced in? What was the market not expecting? What is new information for the market? Well, again, if you've just tuned in, we're comparing December's FOMC minutes to January's FOMC minutes. Those are more important than the actual FOMC report. Why? We get the behind the scenes of what they're actually thinking. A lot more information than we get from the statement that Jerome Powell presents. That's a very calculated statement. This is 25 pages of documents that we've just gone through. What changed from last time? So this is, again, what's changed in the wordings. This is important. Downside risks to employment rose in months was dropped from the statement. So again, here are the big things. This is why, okay, markets are coming down now. Here we go. God, it took them a while to catch up. Nasdaq heading down big now. Bitcoin making lows of the day. So these are the big things to take away. Remember, in December, there was this statement in the PDF. It said, downside risk to employment rose in recent months. That meant unemployment's going up. That meant that was a reason for them to cut rates. They removed that statement. The minutes we just got, that statement was removed. What does that signal? Well, it signals they're not actually worried about downside risk to employment anymore. That means they can keep rates where they are. So they dropped that statement. That was the single most important sentence justifying cuts in October and December. That's why they cut rates in October and December. Its removal is the clearest signal that easing rationale has weakened. The reasons for cutting rates has essentially been removed. They're not even mentioning it anymore. They didn't want to include it. That's a big signal. Then, economic activity got upgraded from moderate to solid. December said moderate, January said solid. The Fed sees stronger growth, which reduces the case for cuts. The economy is so strong, it's good enough. We don't need to be restricted. We can continue to be where we are because it doesn't seem to be that restrictive. We don't need to cut rates. That's something new that got added. The next thing that got added, rate hikes entered the conversation. Several participants. It's not a few, it's not a couple, several. Again, all of these little bits of the way that they word this is calculated. Several participants raised the possibility of upwards adjustments to the target range. Essentially, they're suggesting rate hikes. This did not appear anywhere in December. This wasn't mentioned in December. This is new. This is something the market hasn't priced in. How is the market going to price this in? Well, it's probably not going to like it. Even as a conditional minority view, its meaningful shift in the range of outcomes being discussed. Look, I'm going to give you my full thoughts at the end. I'm not saying we're going to raise rates by the end of the year. I actually don't think we're going to have rate hikes, but it's how the market perceives this and what they're saying. Labor market risk assessment improved sharply. December is said, this is direct quotes from the minutes. Again, we've just gone through the pages of minutes from December versus what we just got half an hour ago. Here we go, Bitcoin heading down, Nasdaq heading down, just like we said. I don't like seeing the market go down. I genuinely don't like seeing the market go down, but the writing was sort of on the wall, and we've been discussing this. Again, we might get a rally later today, but the way that these minutes have come out, it's not looking great. Labor market, and this is why we cover the minutes. Everyone else is sleeping and not covering it. This is more important than the FOMC. Let's go to our final 2 points, and then I'll give you my final take. Labor market risk assessment improved sharply. In December, it said most participants judged that the risk to labor market remained tilted to the downside. January, the vast majority of participants, and we're talking about 10 out of 12 at this point, the vast majority of participants judged that the downside risk to labor markets had diminished. That's a big move in one meeting. This was the one thing that the Fed was giving the reason for cutting rates, was because of this whole labor issue. This unemployment going up. They were worried about the unemployment rate. They were slightly worried about the labor market. Now, they're no longer worried about it. They've removed those sentences. They've removed those sentences from the report. So essentially, they've always, over the last 6 months, we've seen them, and we've seen the market rally because they were talking about unemployment being an issue, issues with the labor market. And if there's issues with the labor market, unemployment's going up, then what they do is cut rates. They've removed that issue. They're essentially saying the labor market is no longer an issue. Again, hawkish. None of these big points have been dovish. There is 2 spots left for the newsletter. If you want the full analysis after, if you want the daily newsletter to get you started for the day with crypto stocks, no ads, no random sponsorship, no one controls what I say. I actually am doing this because I love doing it. I spend 8 hours researching it. There's only 5 things you need to know. I don't like how every other news agency works with sponsorships and ads and 5,000 stories you don't need to know. I tell you the 5 things you need to know. I tell you the chart of the day. I tell you the deep dive of the day. I give you the FOMC cheat sheets. I give you the CPI cheat sheets. I give you all of this information. I study the markets every single day. I give you the £5,000 portfolio challenge. I give you the training course. I give you all those perks, benefits, one-on-one DMs, private community. At some point, we're going to have to cut it off. So if you want to get it, today we're running 50% off. 5 people are going to get it today. There's only 2 spots left. They might have gone as well, but there's 2 spots left. I'll give you an update in a second. The link is in the live chat. If you don't want that, you get lots of benefits in the free plan as well. So check out the free plan, the monthly plan. But if you do want to level up in 2026, go and grab the 50% offer. It's in the live chat right now. I'll pin it in the comment section as well. I'm going to answer your questions as well in a second. Replace pinned message. Okay, the last point. Voter rotation shifted the committee. Hammock, Logan, Paulson, Karishki replaced Goodsby, Collins. The committee lost its most vocal dove, Goolsby, and picked up known hawks. The 10-2 hold, yeah, that we already knew about that. That's not massive. So the final take is these minutes are more hawkish than the hold itself suggested. So again, remember, we got the FOMC. They said hold. Jerome Powell came with a pre-planned speech, answered lots of questions about. There was a lot of distraction because everyone was talking about the new Fed chair. He didn't answer many questions because he kept saying, "I'm not going to answer those questions." And then we just brushed past the hold. Now we've looked at the minutes, and this is why I tell you the minutes are so important. Look at the markets coming down now. The hold. This is more hawkish than the hold itself suggested. The removal of downside employment risk language, the upgrade to solid growth, and the first mention of possible rate hikes all point to a committee that is in no rush to cut and could stay on hold well into 2026. The two dissenters wanting cuts, Miran and Waller, are a minority on the committee that now skews hawkish after rotation. For crypto and equities, the liquidity backdrop from reserve management purchases remains supportive, but the rate path is getting pushed out. Friday's PCE, which we'll be covering on the show, again, I keep coming back to this, is now even more important. If core comes in at 3% or above, the market will need to reprice towards 1 cut or 0 for 2026. If it surprises lower, then June stays alive. The March dot plot will tell us if the hike discussion was an outlier or the start of a broader shift. That is my thoughts. Let me tell you some more of my thoughts. Now we're seeing the market catch up. The market is now down. Okay, I'm going to go to the live chat for a second. I'm going to give you my thoughts as well. But essentially, you guys already know my thoughts. It's just backed up what I've been saying. I'm going to be defensive. I'm building the base of my portfolio. And then there'll be a better time to buy into the market. In my opinion, again, I do have positions in the crypto market. I have still got spot position. I've still got a little bit of the S&P 500, but the base of my portfolio right now is defensive with a lean on sectors that will still benefit from AI, like healthcare and utilities and copper, even though they can be defensive. So if you want to see my full positions, that is in the £5,000 portfolio challenge. It's in the newsletter. There's 2 spots available at 50% off today. That's why I've been positioning that way, because I've been worried about inflation. And the Fed is worried about inflation. They were distracted by the new Fed governor. That's what all the questions were about. The market missed why they actually paused. And the reasons for the pause were in this report, and they were not good. They haven't even mentioned tariffs. They're just worried about inflation. They're not worried about the labor market. And that essentially, they've taken specific language out of the report. I'm going to be releasing this to the premium members in a second. But let me go over to the live chat, answer some questions, and then we can go into some charts as well. But right now, the market is heading down. Okay. Someone's just said the economy market's strong. The economy is not the stock market. If the economy, people make this mistake. The economy is not the stock market. If the economy is strong, doesn't mean the markets will continue to be strong. Okay, let's answer some questions. If you have a question right now, drop it in the chat and let me answer it. If you haven't got the 50% off offer as well, I'm putting it in the live chat as well. Let me just scroll up a little bit. What is this report? This report was the FOMC minutes. This is more important than the FOMC. Let me just tell you exactly what we just got. Someone's asked this question, so let me read you this again. The FOMC, you've obviously heard about it. That's when Jerome Powell takes the stage. He says, "Good afternoon," and the markets go crazy. That happens 8 times a year. But after each meeting, they release a short statement of their decision. Yeah, we see that. It's a very calculated decision. Then 3 weeks later, and today was that day, they released the minutes, a detailed 15 to 20-page account of the full discussions that took place behind closed doors. The statement tells you what they decided. The minutes tell you why. That's why we like to look at the minutes, the more boring things, the things that people don't like to cover, we cover it. How divided the committee actually was, what concerns are building internally, that distinguish matters, because this is what I put in the cheat sheet before. A 10-2 hold is what we got. Could mean the committee is firmly aligned on pausing, or it could mean that 5 people wanted to cut, but they've just barely held back. In fact, what we got was 10 people that paused, and they were very strong pauses. They weren't even thinking about cutting. Those are two completely different signals for where rates go next. And as you can see, the signals that I believe we got in the minutes today is, guys, as I've said, we're not getting many rate cuts this year. Maybe none. In my opinion, one. Maybe two. I don't think we're going to get hikes. If we get hikes, then we're in a completely different situation, and that's even worse than I feared. I am pretty bearish on the markets for some point in 2026. Bearish in the sense that I think we're going to be choppy. I think we're going to go into a downturn. I think something's going to break, and I think we can get better positions. I'm not running on the sidelines going cash heavy and just pretending that being out the markets is a good idea, because that's never a great idea. You just want to be prepared for these situations. Anyway, if you want to know more about that, you can check the £5,000 portfolio challenge. You can see how I've positioned myself. So this is what the minutes are. It tells you how strong their holds were, if they were leaning towards a cut, and all of that sort of stuff. That's why it's so important. That's why we're covering it. Are we covering stock earnings? If yes, please share your thoughts on Figma. I haven't looked at it. At the earnings for that, 2 heads are better than 4, are better than 2. We all share our. Yeah, everyone can share their opinion. That's how we learn. If we were just in an echo chamber of everyone saying, yes, we're going to go to the moon, or yes, we're going to crash, then there's no use in that. New chair coming, May inflation. Guys, this is just reminding me of something. New chair coming, May inflation will be in. Who cares what Jerome Powell? No, this is the issue. You don't understand. Guys, please understand this point. Just because we're getting a new chair doesn't mean everything's going to change. In fact, the market started correcting ever since we heard about the new chair, because he's actually a bit more hawkish than the market thought. But that's not the point. The point is, he's just one person. He'll be the head of the chair. Jerome Powell doesn't make these decisions by himself. He heads the committee. He has some influence. But at the end of the day, he's still only got one vote. This new Fed chair, Kevin, he might be dovish. He might want to cut rates for Donald Trump. But at the end of the day, he has to convince the whole Fed, or the majority of the Fed. He's at the end of the day only got one vote. So everyone that says, don't worry about Jerome Powell, we're going to have a new Fed chair and we're going to just cut rates. No, that's not going to happen. We've just seen here that the majority of the Fed are not worried about the labor market anymore. Lots of participants, or several participants, are now looking at rate hikes. The new Fed chair is only one vote. He doesn't get the final say. It's one vote. So please do understand that. Everyone's saying new Fed chair, doesn't matter. Who cares about Jerome Powell? Well, that's not the case. Lady Buckley in the house, say thank you. Thank you, Lady Buckley, for being in. I think you gave away a few memberships. I really appreciate it. I think for some reason it didn't pop up on my screen. We're big pump on Friday. We're going half a sentence per 5 minutes. Chris, what do you mean? We're going half a sentence per. I've given you my full. I've condensed 25 pages into all those sentences. So I think we should spend time on each of those points, and we've got through it. So high energy investments, AI will take all jobs though. It won't take all jobs, I don't think. Can we just count AI agents as people in these jobs? And I don't think you'd want to, because we want it to look like jobs are, the unemployment's high, so they cut rates. AI going to kill retail traders. Yeah, but I don't think traders really have too much success anyway, so I don't think it's going to take many people's jobs in that sense. There are AI agents in the decisions of rates. There's all sorts of algorithms. It's not really you can call them AI agents, but there's all sorts of algorithms that hedge funds use to look at certain words and trade these events. HYMC up 27%. Thank you very much. You can't employ anyone. You can't sack anyone. I don't know what you mean by that. I was told HYMC too early, but the profit is profit. Good, congratulations to you. Profit is profit. But again, I always preach. There's lots of lessons that I try and teach on this channel. Don't sell your winners too early. When something's in an uptrend, it's probably going to continue in an uptrend. And too many people sell things too early, and they and they don't like to sell their losers. They take money from their winners and put it into their losers, and the losers continues to lose, and the winners continue to win, but they're no longer in their winners. So that's one of those lessons you need to understand. Big pump incoming on Friday. Copy that. Sensei, do you see this as a political retaliation? Do I see this as a political retaliation? No, because I'm not too political, and I sort of thought that before they even released this. Shorting silver with margin, good luck to you. Sounds concerning. Good luck to you. High energy investment, Sensei DC, I've answered that. Not really. My short is looking nice. Congratulations, Yestin. 3 QQQ, no, not yet. SQQQ, that's not good. All my trades are winning again, shared on Discord and Electrum. Yes, if you want to get Martyn's trades, look in the description. Martyn posted a link in the live chat as well. You can get all of Martyn's trades for, I think, $3 a month on Discord. So, and also as an Electrum member here on YouTube. What about the new Fed guy in May? They may work together and lower the rate. Yeah, he might have an effect, but he's not. At the end of the day, he's one vote. I think the Federal Reserve is reluctant to lower interest rates, possibly due to political tension of Trump. Even though tariffs appear to be performing well, I'm not convinced inflation is as is. I need to go over to the members' comments. High energy investments. Sensei, do you see this as a political retaliation? Not really. It could be, but I don't think so. I mean, this is something we've been concerned about for a while. Commercial inside the screen. Bet after that, and now YouTube ad. Sorry, Chris. I mean, a lot of people have YouTube Premium and they don't get the YouTube ads. I try to provide 95% value and then tell everyone about the newsletter, because I really do think the newsletter is a great tool for people. If I had access to a newsletter, I would have saved a lot of money and I would have learned a lot of things. I've essentially created something I would have loved. And again, I write the newsletter, so I love it. But this would have been saved me years and a lot of money having this newsletter, in the sense that I was paying for so many news subscriptions. I was learning how to trade this and the other. Okay, I can confirm that there's only one space left for the 50% offer. If you want to get the 50% offer, I put the link in the live chat. Okay. Economy is strong, markets are strong, earnings are strong. They don't dare say tariff. Yeah, they haven't mentioned tariffs, which was interesting. I agree with you. Get some sleep. Why? US economy is not strong. Sensei, have you looked at historic patterns of midterm years in the stock market? Yeah, midterm years are down years in the stock market. Very wrong trusting that our market is strong. Has there been any speculation as AI taking over retail trading or affecting it anytime soon? I don't know what you mean by retail trading. Are you talking about like leveraged stock market trading? Great context, Sensei. Keep educating people on cause and effect. Thank you so much. Tidy Big Dog, we are not going to invest in a stake. Oil, do your own research. Let me see this. What has happened here? I'm going to do a few charts in a second, and then I'm going to answer some more questions. Just stay with me. Oh God. Oh God, I couldn't see the behind the scenes chat for some reason. It's just reloaded. Please and ask the audience to judge or verify me. Oh, Martyn's winning on Discord. Just sold Google for a profit and bought Coca-Cola. Wins again. Congratulations to Martyn and all the Discordians. They've just done a trade there and won. Let me see why this interview screen is not working. Windows. Interview. On. Okay, that should be working now. Oh, there we go. Joining. Oh, there we go. Oh God, this was, I accidentally had the interview screen off. Let me bring Martyn on the show. So we've got a special guest on the show, just done some winning trades as well. So very happy to have Martyn on the show, and that's not how we do it. What's going on? Let me have Martyn on the show. Welcome into the Fed Minutes show, Martyn. Lovely to have you on.
Thank you, Sensei. Great job as always. You're doing a fantastic job. So I just wanted to reiterate what you've just been talking about with the minutes. This is really important because we've got a capital rotation going on right now. We are going to see crypto rally. hence I bought massively into crypto, over 110,000 now with XRP and Ethereum. But we're not going to get there just yet. We've been trimming, we've been taking profit from our XRP and our Ethereum. And today, what I've just done on the basis of that information, which you delivered before the market reacted, which was fantastic. I hope a lot of people got some benefit and use from that. I took profit, some small profit, only about 80 odd dollars, actually, very small gain on my Google. Very, very small percentage, in fact. I had $18,000 worth of Google. I just took a very small profit on $83, but basically a wash. But nevertheless, I decided to take that and then buy the dip on Coca-Cola, which is what I just did. And both of those trades are winning trades. A small gain on Google, but a winning trade on Coca-Cola. And I want to be clear why I did this, because Coca-Cola is now at its target price, just under, but I'm now reevaluating it for going into next year of $96. So with the World Cup coming up, there's a little bit of movement this year left, but it's not really the profit we might get, the 1 or 2%. It's protecting our portfolio. Not that Coca-Cola won't go down if we crash, of course it will, but it'll just rebalance us with the amount we've got invested in Google. I've still got like $200,000 in Google. It's not like I'm out of Google or anything. And don't forget my Roth IRA. There's 50,000 in there as well. So there's $250,000 still in Google. But that's why I've done that. Your newsletter was very, very helpful today to me to be able to make these decisions. So I just want to clarify what we did there. We will see Bitcoin, in my opinion, and XRP rally later on this year, but it could come as far as October. And we've seen Tom Lee just keep putting out his predictions all the time. But I also, and it's very important to always win and protect your money. So that's why I've done that. But also, not only do we aim to be the most honest channel on YouTube TV, but also to be seen to be honest and fact-checked and verified by our members. So I'd like everyone in the chat now, if you remember me saying live on the shows repeatedly, over the last 12 months, that in 2026, we would only get 1 or 2 rate cuts. If you remember me saying that repeatedly and also repeatedly in Discord, please say yes in the chat. If I'm making that up and I'm just talking nonsense and lying, then please say no, we never heard you say it. So I'd like to see that. It's important because people are checking us every day and we want to be fact checked. We fact check ourselves. And as we grow, we get more and more people watch our shows and judge us. So we make mistakes. We do make mistakes. I haven't had a losing trade in over 2 years, but nevertheless, at some point, we're going to make a mistake. So it's important to be transparent. It's also important to be fact checked, because too many people on YouTube will say, I said this, and no one remembers them saying it. But if you remember me saying that 1 or 2 rate cuts this year, which is what I think we're going to get. I just heard Sensei talk about the fact that people have mentioned in the chat about the new Fed chair. That's not going to change anything. I agree with what Sensei has said there. He's only one person on the board. And to be quite frank, I don't think he's in 2 minds to lower rates either. So Trump's not going to get any difference than what we've had with Jerome Powell. The Fed, I believe, are doing a generally good job. We can't drop rates with where we are today. It just isn't the case. Good news coming out of the UK today. Very, very good to see that. But again, it's one print. What will happen next? We'll only time will tell. But anyway, I can't see because I'm looking on this phone-in screen. Is there any yeses or nos in the chat? Can you just tell me what anyone's saying?
Yeah, everyone is saying yes, yes, yes. Yes, I remember. There's not one no. Everyone's saying yes. They've fact-checked us as we love them to do, and yeah.
Yeah, it's important it's important because we've got our verification tick on YouTube, and that's a big deal in the financial space. Which from YouTube, our information is genuine and authentic, and we're accurate and we're trusted. And it's important that it's very easy to say, oh, I said this and I said that, and you could always bend the truth. But I also want to clarify something that has been questioned as well. When people talk about my overall balance, they don't take into account the rotation, that the profit I've taken and put in my Roth IRA. I can't share it on the screen right now because I'm calling in, but in my Roth IRA, I'm up some 60%. So what I've done, I transfer money across when I make profit into my Roth IRA. And some people, it's not through malice. Maybe some people are, but they don't know what they don't know. And they'll look at my overall and they'll go, he's only up 14% or 16% at the end of it all time, but they've not seen the money, that they don't understand how it transfers across into the Roth IRA, which then reduces the gains, but is then in the Roth IRA, which is up sort of 60%. So the two are added together. But of course, I also, on purpose, take my portfolio down because I've been buying the dip. If I just stayed in cash, you all remember I was up 50% at the end of the year, but I took the money and bought Google on the way down, and that's still falling. So it started to pick up a couple today, but that's. You need to understand the full picture. Anyway, I'll hand it back to you. A great performance, Sensei. A huge audience. I think you've had 30,000 people tune in. I don't know if you've looked yet. You should be a bit starstruck there, mate. About 30,000 people came in today to see your event. I want to thank everyone for all the good wishes. I've been feeling very poorly today. I've been in bed all day, and Leah's been taking care of me, so I thank Leah for that. I plan on being back again tomorrow morning. If you want all my trades, I am on Discord, 90% discount. All my trades and my winning trades that I did before, all right, on Sensei's validation. I had my thoughts, and that was extra validation, the way he was reading the minutes to me, to all of us. So I decided to take profit, a small profit, but at the end of the day, some people will say $83 on $18,000. Why would you invest 18 grand to make $83? I didn't invest $18,000 to make $83. I invested 18 grand to make 25%, and I've still got 99% of my money in Google. I simply sold the lower lots to get money out to buy Coca-Cola on the way down because of the rotation, and I think it was the right thing to do, and both of those trades have won again. So Sensei, I'm going to hand it back to you. You're doing a tremendous job. I wish everyone the very best of luck. Remember, guys, it's easy to make money. The hard part is to keep it. I encourage everyone to get Sensei's newsletter. Did you say you're giving away 50% discount today? Did you have any of those left?
Yeah, there's one left.
One left. Well, I strongly recommend everyone get that. You won't get a better newsletter. Again, we often get people say Martyn just reads off things from the screen when he's doing his reports. Well, yes, I am reading our newsletter. There's no secret to that. It's not copy and paste stuff I found on Seeking Alpha or Alpha Spread or anywhere else. It's our very own newsletter. It's the show notes, the script of this newsletter, the same way as a newscaster will read off an auto cue. I have a prompter and I can see what Sensei is giving me, and then I interpret and add my own thoughts to it. So that's what I am reading. It's a great newsletter, and I'm very proud to have it as part of our show. Sensei, I'll hand it back to you. You continue, mate. You've got a great audience. I'll see you back in the morning. I wish everybody the very best of luck, and I'll see you on Discord later. And if anyone has joined today, I will upgrade. I will accept your friend request if you've sent one. Please do. It protects your account from the trolls and the idiots. Please do send that in. People will try and scam you otherwise. And you've got just a week left now to the end of the month before all the pro content is just on the pro plan, but we're giving it to everyone while it transcends across. Sensei, back to you. Love to your family, and I'll see you in the morning. Take care. Bye-bye, everybody.
Thank you, Martyn. Hope you feel better, and look forward to seeing your show tomorrow. Bye-bye.
Thank you.
Brilliant. Always great to have Martyn on the show. As you saw there, he had some winning trades during the FOMC minutes. Made some money on what was it, Google and Coca-Cola. So I do recommend everyone goes and checks out what Martyn's doing. Again, we don't give financial advice. We're giving our thoughts and opinions there. And you can see how Martyn was trading that event as well. As you heard Martyn say there, we do use the newsletter as our show notes. That's where our information comes from. That's where hours of research goes into it. And we present it in the way that matters for our audience. Our audience likes stocks, our audience likes crypto. And that's the side of the market we're on. We're retail investors at the end of the day, but we want to get to a financially free place. So how do we do that? Well, we need to learn how to use charts. We need to learn how to read data. We need to learn how to understand the news and structure a portfolio. And that's everything we do in the newsletter. So there is one spot left. I need to go check that. Maybe there isn't. You will let me know if there is or isn't. There is the link. We all wish that Martyn gets better soon. And it sounds like we'll see Martyn again for the morning bell tomorrow. 50% off on the newsletter today only. For this FOMC minutes, we're basically giving it away. It literally works out to, I don't know, 20 cents a day, something like that. I mean, it's definitely worth it. So let me read some more comments and then we'll go over to the charts. We're getting a little bit of a bounce on the market now. We're still down quite a lot since those minutes came out. We are getting a little bit of a bounce. Again, nothing goes down in a straight line. We could get a bounce. We could, as I said, we could go up. But essentially, what I'm doing is I'm getting ready for my short-term, medium-term, long-term positions. And I think this was a very bearish FOMC minutes. Okay, so let's go back to your comments and then some charts, my final thoughts, and we'll get ready for PCE on Friday, which is, again, now everything has turned to inflation. That's what the Fed cares about. That's what we care about. If the Fed cares about it, we care about it. PCE on Friday is going to be massive, so make sure you tune in for that as well. Please do subscribe, and you'll see that come up on your page as well. Typos, got to love them. Yes, nothing safe right now except SGov. Nothing safe. This is fly. Short the QQQ, says Uncle Margin. Large caps. Why not? It makes me laugh. Buy it cheap, sell it dear. Kimberly says, get well, Martyn. I have been super busy today here at work. We'll catch up as soon as I am home. Lovely to have you here, Kimberly. Okay, so let me just round this all up then. Firstly, thank you everyone for tuning in. A massive audience today. Really appreciate it. It's amazing. I mean, we would put in the same amount of work 3 years ago and we would have 30 people watching. Of course, now I put in a lot more work because it's my full-time job, but essentially. So I appreciate that, and I appreciate everyone enjoying these streams and all the kind comments in the live chat and in the newsletter as well. I do try and provide the best information. I do spend hours and hours and hours researching these things for you. I spent the whole day putting together the Fed Minutes newsletter as well, so I hope that benefited people. I'm going to send one out after. I might even try and do the first sort of live video in the newsletter as well. So keep an eye out for that. I am going to be testing something, and the training course will be coming there soon as well with the weekly updates in there as well. So we might do an after show special in the newsletter at some point. So keep an eye out for that as well. So final thoughts. We got the federal FOMC minutes. Again, the FOMC minutes is more important than the statement we get at the FOMC because it tells you why, how divided the committee actually was, and what the concerns were internally. The concerns were removed about unemployment, and that essentially means there's no reason to cut rates, and there was major concerns added in this report about inflation. Again, the opposite of what we wanted to see if we wanted rate cuts. So I'll show you some of the key points again that we pulled out. Labour market risk assessment improved sharply, so they're not worried about the labour market. Rate hikes actually entered the conversation this time round. The economic activity was upgraded, meaning there's no need for cuts, and downside risk to employment rose in recent months. That was removed from the statement. So again, everything pointed to a very hawkish minutes. Everyone was distracted by the new Fed. They thought he will come in and cut rates, but essentially he can't. Jerome Powell, all the questions that were asked to him at the FOMC were all about Kevin and the new Fed chair, and they all ignored what the real reason for them holding rates was. So I'm not expecting many rate cuts, just like Martyn said, just like I've been saying as well. Me and Martyn have agreed on the fact that we're only going to see 1 or 2 rate cuts this year, and I stick by that. And now the market will have to price that in. We'll keep an eye on inflation because that's the most important thing. My portfolio, as I've been building it, again, the portfolio challenge, I released it on the newsletter. I'll give you a quick snippet over here. You can see exactly what I'm buying, how I'm buying it. I use Trading 212 because I'm here in the UK. I'll give you my full research, the full holding summary, what I'm looking at, subsector analysis. Then I look at the research between stocks within the same subsectors, because that's the only way you can really compare stocks. You can't just look at them one by one. Then we look at the subsector, why it's in the portfolio. We spend literally probably 20 hours on every portfolio challenge newsletter that comes out. I've been building from the base, copper, because it's defensive and also it's going to be there for electrification. It's probably the metal that everyone talks about, gold and silver. Copper right now is very interesting. I've been looking, and that's some ETFs, some individual holdings, some copper holdings. That's one of the pies, that part of the portfolio. We've just done healthcare. I'm looking at utilities and consumer staples until the next big correction, which I think will come in the crypto market. Then I'll be looking at crypto stocks. I'll be looking at more rate sensitive stocks in that recession phase. Again, if you look at the newsletter here as well, and then I'll be building on the more risky things. But once we're in a downtrend, I'll be releasing that all on the portfolio challenge. Again, if you go to sensei.news, you can see all the portfolio challenge newsletters. You can see all the morning forecast newsletters. You can see the XRP weekly newsletters. Just want to show you this from yesterday. We're looking at the Merrill Lynch clock as well, which is interesting. If I bring it on the screen here, you can see where potentially in the slowdown phase right now, heading into recession. So we're positioning ourselves for the cycle. Again, one spot left. I believe there is a monthly plan and a free plan as well. So everyone should go grab that newsletter. 50% off. Thank you everyone for tuning in. Let me see if there's any final questions. Love your newsletter, Sensei. You do a fantastic job every day. You cover the reports. Thank you, Kimberly. I'm only going to get better as well. It's only going to get better. So I appreciate it. Crypto's dipping or staying status quo for a while. I think crypto is going to be volatile. It'll dip with the stock market. Again, I've given my full analysis before. MicroStrategy tops out, Bitcoin tops out, Bitcoin bottoms first, altcoins bottom next, then the stock market bottoms, then the crypto market bounces back quicker and faster than the stock market. Right now in that phase where the stock market needs to pull back, crypto will probably go sideways, have another capitulation potentially in May or October, and then move on into a bull market in 2027. So this year is all about positioning. So it's probably the most important year to keep up with the news, the portfolio challenge, learning how to chart, everything like that. I think Sensei, I just signed to your newsletter. Looking forward to it. Oh, Nom, you've just signed up. Brilliant, Nom. I look forward to Noms. I look forward to seeing you there. Thank you very much. I'll leave everyone with that link then. 50% off. I'll shut that off as soon as I come off. I think there was one spot left. Maybe there's none left now. There's also a monthly plan, a free plan. I'll leave that with you. And now I will end the show. I'll be back for a morning show in the morning. Good luck to everyone. I hope these Fed minutes was useful to you guys. Remember, it's the things that people find boring that we find exciting, because that's how we understand more than most of the retail investors out there. Until next time, if you're new here, please do subscribe. But as always, take care of yourselves and each other. You're going to go to the extra channel now. That's where we keep the conversation running.